Tomorrow is the big day. I hope you're excited because we are at a key inflection point for the stock market. The US has kept interest rates high for a while now, and now they're about to start dropping. This will have big implications for the stock market, the dollar, and the economy as a whole. We're not wasting any time today. Let's get right to it.
Tomorrow is going to be the biggest day of the week and potentially the biggest day of the year as investors are pricing in a 25 basis point rate cut at the FOMC interest rate decision at 2 p.m. Eastern time tomorrow. Then in 30 minutes after, the man, the myth, the legend, Jerome Powell will be speaking at the FOMC press conference. Now, I know that investors generally like rate cuts. It generally spurs the economy, but that doesn't always mean that stocks go up. And lately, we've actually been seeing the exact opposite happen. We can see, looking at data here, at the last rate cut on December 18th of 2024, the market actually dropped 2.9%, and at the previous two cuts before that, there was a lot of lackluster short-term price action. Now, looking at the percentages overall, there's a 96.1% chance of a 25 basis point rate cut at the meeting tomorrow. There's a 3.9% chance of a 50 basis point cut. So there's 100% chance of a cut being priced in. Let me know in the comments, what do you guys think is going to happen? Will it be 25 basis points or will it end up being a 50 basis point cut? I personally am going with 25 basis points, given that it's a 96% chance being priced in. But as we know, Mike, FOMC interest rate decisions spur a ton of short-term price action, and considering that the SPY made new highs today, I think that we have to look at tomorrow very carefully.
Yeah, and I think that there's a lot of skepticism in the market right now with investors fearing that this can be like a buy the rumor, sell the news type of event. And there are some worrying signs to pay attention to. It's great to see the market at all-time highs. Granted, it wasn't the most bullish, euphoric run intraday today, but we do have some serious, concerning signs, like how the dollar lost 10% of its value this year. As we know, the dollar is the world's anchor. It falling like this shows capital moving out of the US and into other markets, and sharp moves like this ultimately reflect shifting confidence in US economic policy and growth. And considering we are seeing the first rate cut of the cycle tomorrow, it is going to be a very important day and hopefully a turning point to, stop this bloodbath with the dollar. Because as we can see, the US has been kind of lagging the rest of the world as we've held rates steady. The UK, Europe, and other areas of the world have been cutting rates for a little while now.
They really have, and it's something that people have been criticizing the United States about a lot. And, even President Trump has actually been criticizing Jerome Powell, calling him too late Jerome. And I know that there's been a lot of fun rhetoric with that going on this year. Again, I know some people might think that that's a big negative. Nonetheless, though, I know that Trump has been pushing for these rate cuts, and I know that it's going to be something that if we do not get them, could you imagine Trump's Truth Social post tomorrow, Mike? I mean, there's going to be some craziness going on out there. But either way, the U.S. has been lagging behind these other countries, which have already been doing this. So, there's a lot of people that say that this should have been going on for a long time, especially since inflation hasn't necessarily been, out of control, right? But now they're forced to do it because, of course, the jobs market has been weakening. And Mike, we can just see, looking at even like more stats here with this, I know that we've looked at these stats quite a bit recently, but the short-term price action that comes from this isn't always the best. Like over the course of the next month, the market's generally only green around 50% of the time. That's really not the best stat to see, and it's something that worries me whenever we think about this. And we can even go back to the first chart that we showed here that shows that whenever we get rate cuts, while it's generally a good thing, it doesn't always mean that stocks have to go up.
Yeah, and what it does mean, though, is that there are bigger moves, and that is good for short-term traders who are willing to adapt, especially as the trends change. Tom, how about we dive into the charts now and look at some important levels to keep on watch for tomorrow and the rest of the week? I know we made new all-time highs today in pre-market, but I didn't love that intraday price action.
I did not either. There was a pretty big sell-off from open, and I think that there was some de-risking going on ahead of the event, and I can't blame traders either. Hey, if we're going to go into a big FOMC event and you can get out at all-time highs, why not, right? Especially whenever, we're going into a rate cut and a policy shift, and, the market's been doing good with the rate cuts, or with rates actually staying high. So, I think tomorrow's going to be huge, and whenever we look at the SPY today, there was actually a huge breakdown through the previous support, and that's at 661. Now, this was a previous resistance, but it became support today. I'm going to be watching the upper end of that range around 660.75 to 661 very closely. Even around the end of the day today, the SPY hit and started rejecting there. This is kind of setting up for a head and shoulders pattern in the immediate short term. We have the head here, we have the neckline and the shoulder lines starting to play out. Now, that does not mean that it has to play out this way, but the way that we are looking at this is, okay, where we're seeing this neckline and the shoulder line, and more specifically, the bigger support down here around 659.50 is going to be crucial. If we end up breaking down below that tomorrow, that's really where I'm going to look at more of a sell-off, and I'll be looking at some of these next supports around 656 to come back into play. So ultimately, that's really what I'm watching for, and if we're able to get up and through those shoulders there up around 661, then I'm going to be looking for an all-time high push up to around 660.250. I do think that if we have the FOMC decision come out and there's some bullish price action, it better be enough to get us through that all-time high, right? Because if we only get a 2-point move, I think people would think that that is pretty lackluster.
Right. And also, if you go back to that blue Kurdic data, we can see over the past few FOMC interest rate decisions, we have seen a lot of big moves. Of course, there were a few moves that only moved up or down by 0.5%, but you see a lot of, 1.5% days, 2% days, and nearly a 3% down day back on that December 2024 FOMC meeting. And, if we saw one of those tomorrow, that would put SPY closer to that 640 to 641 area. So yeah, definitely be prepared for volatility, stay adaptable, stay flexible. That's going to be the most important thing heading into tomorrow and the rest of this week. And I really like how you showcase when we look at the Carson data that in a longer term sense, rate cuts, generally speaking, have been positive for stock prices, especially when you look 3, 6 months and a year out. A year out, the stock market has closed higher 100% of the time. You just have to be prepared for a rocky short term. And I'll also emphasize that because if we look at historical price action specifically for this week, it gets pretty rough. As we can see from this data here, we have seen a lot of profit taking come into the week we are currently in.
5 of the last 6 readings have been red. I know that last year's was positive by 1.4%, but my gosh, those other 5 readings were terrible, down 2.9% 2023, 3.7% 2022, 1.9% 2021, and 2.5% in 2020. And I think that really goes to show that we're in a crazy season, right? The season that we're in is FOMC season, and generally we see some craziness around this time of the year. There's usually some FOMC press conferences, of course. And, of course, Mike, looking at all the craziness right now, we're also seeing the VIX pop up. If we go to a daily chart of the VIX did rise today, and it's starting to bottom off down here. And, with it rising the past 2 trading days and today being up 4.4%, does show that the market is expecting at least a bit of craziness. And hey, the VIX is up 4.4% on a day where the SPY made brand new all-time highs.
Yeah, and there are a couple things from that. Number one, when you see the VIX rising while the market's at all-time highs, that generally isn't the best sign because the VIX tends to rise when fear is increasing, and also when the VIX is rising, it's a great forward signal of potential trading opportunity because just like we saw in the major sell-off with April when the VIX just skyrocketed, there was not only a bunch of longer-term opportunity buy the dip opportunity that came from that, but there was also a ton of short-term trading opportunities as well, whether it be playing puts in the short term or even calls on some of the strongest green days that we've seen. So yeah, very exciting. But while we're talking about craziness, we definitely have to hit on what's going on with these Chinese stocks because they're just going insane right now. Tom, CWEB, one of the most popular Chinese ETFs for internet stocks, is 2x leverage, by the way, is just crushing it. Individual stocks like Baidu are up 7% today. Neo, Baba, and others are all crushing it. What is going on here?
It's actually kind of insane. Whenever we talk about the China stock sector in general, we've been seeing China stocks rise for a while now. I know that in the ultra short term, since the beginning of August, it looks great, but it looks even better the longer that you zoom out this year. And something that really started to kick off, I would say a lot of this overall buying is whenever we go back to September of 2024, China started to really do an overall shift in their economy, and they started to ease. And when I say ease, they started to do a whole bunch of things to end up easing here. They ended up trying to do things with their stock market, housing markets, monetary policy easing, and they even ended up prodding insurers to invest billions of dollars to help support their markets. So, there's been a lot going on in China, and of course, we could sit here and talk all day about the specific regulations, but looking more at like the opportunities here, we are seeing a great rip, and I think that it's a good sign, right? There's actually weak correlations between China stocks and the SPY. So if we start to see the SPY get a little shaky or something of that nature in the short term, we could end up seeing these China stocks continue up in a very good way. But I'm really happy to see these stocks performing as well as they are, Mike. And it's good to see, I guess, China stocks turning things around because, at the end of 2024, before this policy shift, some of these China stocks were at some very low levels. And, the longer that we zoom out, like on BABA and some of these charts, it still shows that there could still be a ton of room to grow also.
Yeah, like they've been arguably discounted and it just makes it easier for them to rise. And then like you mentioned, when you have the Chinese government really pumping and stimulating their economy, it definitely has a bullish effect. And what's really nice about that is that a lot of Chinese stocks have had big money plays with them, whether it's PDD in a recent sense, ASHR, CWEB, or honestly a bunch of other ones. There has been a lot of bullish action here, and I know people have been doing pretty well with that. So I definitely like to see that. And then also, like you mentioned, when you have like a weak correlation to the US market, it can make for some like good potential trading opportunities, especially in a point where, the US market will be especially volatile. So either way, keep a close eye on this area of the market. It is going crazy. And besides that, let's jump right into the fun stuff, which are some setups and predictions. And my first one, as we've been saying for quite a while now, is PDD to the upside. There was a recent $10.2 million big money trade with this one. The stock has been strengthening. It has been on my bullish radar. It's still on my bullish radar. I like how it is getting closer to these recent highs right around this like 133 area. It popped up by around 1.3% today, which is a good amount. It's not to the point where it's overextended. These call options are in the money. It has a relatively short-term expiration, but enough time where time decay isn't a huge issue yet, and it's still on my bullish radar. This does not mean PDD has to rise tomorrow, but especially over the next few weeks, it's definitely close on watch.
Yeah, and we've also been seeing trade talks heat up as well between the US and China, and I feel like that's been helping in the ultra short term. This is a pretty ballsy trade, $10 million on a trade that expires in just 1 month from the point that this trader entered, and it's starting to perform quite well. So I'll be keeping it on the radar as well, Mike. With my first setup, I'm looking at Solar Edge for a possible daily continuation. I love the way that Solar Edge has been starting to rip up here in the short term. They posted a good 8.24% gain today, and we can just see how strong that daily candle was. And they've been posting a lot of strong daily candles as they've been breaking out recently. But what I'm essentially watching for in the short term is for a good continuation, kind of like what you're seeing on the left side of your screen, where we started to see some good pops to the upside with Solar Edge. Then we got a good, let's say 5 to 10 day run up there. I'm looking for a good continuation over the next few trading days. And if we can break the high of day from today and get above 33.50, pretty good recent resistance, I will be watching for more opportunities. So this is a stock that moves quite a bit. It's in the solar industry. And if we do see a continuation, I think especially in the short term, in a scalping sense, if we have price action, kind of like what we saw today, there could be multiple opportunities, whether it's playing the breakout at open or whether it's playing like the intraday secondary breakout. There's been lots of different opportunities regarding Solar Edge over the past year or so.
Sounds good. Yeah, today it really crushed it. Another stock that is close on my radar is OXY, and it's to the upside. There have been a lot of, geopolitical tensions, and especially, Israel is launching their ground invasion of Gaza City, and that, is potentially helping support this increase in crude oil prices that we're seeing. Crude oil had a pretty good day today, which helped lift a lot of stocks up in the energy industry. OXY especially stood out to me as it was one of the leading tickers as it popped up by over 5%, and it's approaching some of these recent levels around $48 per share. And I love the price action today, intraday as well. Lots of bullishness and lots of momentum and urgency. OXY is definitely on my bullish radar. Again, this doesn't mean it has to rise specifically for tomorrow, but like over these next few trading days and even into like next week, I think it's a hot ticker to keep on the radar, especially with this recent increase of momentum.
Yeah, that is a huge move today, up over 5%. And, looking at crude oil a bit closer in the short term, especially on like a daily chart, it did start to double bottom here around $62 a barrel. So if it could hold this double bottom, I think Oxy could end up doing very well. So I will also keep that one on the radar, Mike. With my next setup, I'm actually looking at Apple. And what I'm watching for tomorrow is, if we end up having a good FOMC interest rate decision or a good move into the decision, I'm going to be watching for a potential Apple breakout. But there are two sides to this Apple trade. So firstly, I'm watching for an upside move. We can see the recent high is up around 241.20. And if we actually go ahead and we switch over here to the daily chart, we can see that there was a recent high around there as well. So at that range, we can actually see on the Bookmap, pulling out the X-ray vision, there was actually a lot of sell walls right there today at 241. There was a massive sell wall. And then even at the end of the day, they restacked up with 36,000 shares. And then as we hit 231 and posted that high of day, another sell wall popped up around 241.30. So I'm definitely going to be watching this very carefully. This is like the major sell wall overhead. If we could break this tomorrow, then I'll be watching Apple to the upside. Now, if we have a lot of negativity into the FOMC event or there's some profit taking, and especially if the event goes south, if we could see Apple pull back under 236, I will look at it to the downside as well. Tomorrow's going to be a crazy day, and I think that having two sides of the equation and having a bullish opportunity and a bearish opportunity is the real way to go, because it's going to be more of a reactive day, I would say.
Sounds good. All right, Tom. Well, besides that, we are all clear for today's momentum plays. And with the first one, we have Bloom Energy, ticker symbol BE, to the upside.
BE is a very momentum-filled stock, up 9.3% today. If it could break above 74, just above the high of day, then watch for a continuation.
With the next one, we have APA Corporation, ticker symbol APA, also to the upside.
I saw a lot of hype with APA today, and it hit right at $25. So if it can break 25 even, then we'll also watch it for a upside continuation.
And then with the last one, we have Peloton, ticker symbol PTON, but to the downside.
Yeah, Peloton, not the best PA today overall. If they break under $7.75, then watch them for a move back down.
All right, so we have these three tickers on the radar for potential continuations if and only if they break through the levels listed. As always, prioritize making smart, long-term oriented, disciplined trading decisions above all else. You can learn about this completely for free in the Key Lessons channel of the Stocked Up Discord. But besides that, Tom, let's jump right into today's $3.9 million big money trade. And we are looking at ticker symbol PAYO. This trade today was with the 5 strike call options that expire on January 16th of 2026. It's a pretty heavy trade coming in at just under $4 million. These call options are deep in the money, and I think it's a very interesting setup. I really like how these call options are in the money, and they have an amount of time to them where it's not ultra short term. Like, it's not like this stock is, being looked at in a bullish way for tomorrow, but it is a trade that has the ability to capitalize off of a broader, more extended move higher, as the expiration is in January of 2026. It's a pretty heavy trade, and there's not a ton of options activity with this stock. So this trade especially stuck out considering how much money was put into it. This is a global like financial services company. The stock has been pretty shaky over the past few years, but clearly this trader is pretty bullish. So yeah, definitely keep it close on watch.
That's a pretty crazy trade, especially being so far in the money at the $5 strike. That's what really gives me that bullish lean on this one. You know, if they shorted those and put $4 million into it, you're crazy, right? Especially given where it is, unless they knew something. But then again, still it would be kind of crazy. Whenever I think about this trade, it's one that definitely makes me scratch my head again. You know, it's a $4 million trade, $5 strike calls, pretty risky. The stock has been stuck in this channel here in the short term, and you know, it is actually right at the bottom of the channel. So if we start to see a good bounce up off of this support, this could be exactly what the trader wants, right? You know, there's a few months left of this trade, and it could end up being a good support bounce. I would think if we do see a support bounce, we could get at least to 750, and if we do test 750, that would actually be the third test since we've touched there the past 2 times. So maybe third time's the charm for a bigger breakout to come in as well. Either way, it's one that I'll be keeping on the radar, and I like the confidence with it being so far in the money.
Definitely. And, you know, we have seen a lot of really good big money trades, especially over the past few weeks and months, especially with the Chinese stocks. So, yeah, we'll see what ends up happening with this one. I think it is interesting. And, you know, if you're new to the channel, definitely make sure to subscribe so you can get our videos recommended to you more often. We post all the time, and in every single video, we cover big money trades, the most important news, information, chart setups, earnings, economic events, charts, and basically everything you need to know about the stock market every single day. Again, if you subscribe, you'll get our videos recommended to you more often. And besides that, Tom, let's give a giant shout out to today's member of the day, Phoenix757 in the StockedUp Discord. They had some great gains with some Apple call options today, so huge shout out to you, and keep on rolling. We have a very exciting day in the market tomorrow. It's definitely going to be a pivotal point for the stock market, and there should be a lot of big moves in the short term. I hope you guys are as excited as we are. Thank you all so much for watching, and let's crush it in the market tomorrow.